Welcome to this live show. It's a pleasure to be here with the FXStreet.com new TV show. I will attempt to do a preview of what we could expect from this week, particularly if we have big fundamental events, the ones that we should pay attention to. And I will also take a look at the charts and take a review of the most relevant trading points, the levels to watch this week, the ones that, if broken, may trigger some rallies that could be interesting for us. Okay, so let's start by sharing. Okay, give me a second. I'm new on this, so I need to. Okay, give me a second. Here we are. We are sharing the fundamental calendar for this week, and as you can see, I hope you can see it fine. There's not much for today, right? And taking a look at Asia, I do believe that China continues to be a big market mover, guys, these days. We had pretty mixed data over the past Asian session, but overall, I do believe that the better than expected GDP figures in yearly basis in the third quarter are the main market leader today, right? They are telling us that the economic slowdown in China is not that bad, and it won't affect that much the rest of our currencies, at least for now. Nevertheless, keep an eye on China because lately it's coming as the main market mover. Anyway, for this Tuesday, there's a lot of minor data, really nothing relevant during the European session. The Reserve Bank of Australia minutes of the latest minute could do some noise during the Asian session, particularly because the market is not quite sure if the Reserve Bank of Australia is planning to cut rates again or not this year. They will be looking for clues in these minutes on whether the bank will or will not cut rates. Honestly, I don't believe the Glenn Stevens will cut rates anytime soon. I do believe that Australia is done with rate cuts, at least for this year, and we will need a lot of more information, particularly because we had good news in the employment sector and the housing sector lately. So my take is that the rate cut is out of the table. So if we don't have close in there, the Aussie will probably trade on sentiment, right? For Wednesday, the only relevant event we have to trade is the Bank of Canada economic policy meeting, right? As you can see in the calendar, there are no chances the bank would move rates. We're expecting no change in there, 0.5%. But lately, the governor plus has been pretty dovish, and the market is already pricing in a dovish tone in the statement, right? In the press conference and statement. So be aware of that. That should keep the Canadian dollar under pressure, particularly if oil prices are not able to pick up. We have seen, we are going to take a look at right now of the oil chart. There has been a big battle there, trying to recover ground, and the fact is that it can't. So if oil prices remain under pressure and we have a dovish statement in here, the CAD will probably continue falling or remain under pressure. Okay, on Thursday, I do believe that on Thursday we will have the first reading in the UK. Really a light week for the UK, right? And although retail sales are not a huge market mover in the United Kingdom, the market will be paying a bit of attention, mostly because it's the only number we're going to see this week in the UK that's worth trading. Nevertheless, I do believe that the pound is bullish, right? Keep in mind that last week we had pretty low inflation in the United Kingdom, and we have a rising wage, right? The employment report came out a bit mixed with a lower unemployment rate, but also more people without jobs. But anyway, the salaries grew solidly. So with strong wage payments, right, and low inflation. Keep in mind that on Tuesday last week, yes, we know that inflation fell below zero in the United Kingdom for the first time, for the second time in almost 60 years, right? That means that there going to be a bit more of consumption. The people has more money to waste, and things are cheaper, right? So that would probably boost consumption in the United Kingdom and therefore mean the Bank of uh, England could be closer to hike rates. Okay, so any positive news should give the pound a boost because it's bullish because of this, right? And of course, on Thursday we have the main event of the week, which is the ECB economic policy meeting. Keep in mind that the ECB has changed its meetings. We are not having any more monthly ones, but every 6 weeks or so, right? And this is a big one. This is the one that they take for the side. Honestly, the market is considering or pricing in or speculating or whatever you want to say it, that the central bank is planning to extend quantitative easing, mostly because inflation remains really subdued in the euro area, right? And since that all of the stimulus they are doing, is helping grow a little bit, but the main target of the central bank is always to achieve the 2% inflation target, and we are really, really far away from there. So over the last month or so, traders have been speculating the ECB will announce some sort of extension in its quantitative easing program. That's what we will be looking for in this Thursday decision. If the ECB keeps its policy unchanged, right, and with a mild dovish tone, which what it's usual, but does not announce, any kind of extension in quantitative easing, that should give the euro a good boost because, as you can see today in charts, the euro is pretty subdued and unable to run against the weakening greenback, mostly because the market is expecting for this decision. Okay, so keep an eye on it. However, if the ECB decides to extend quantitative easing, okay, we'll probably put the euro under selling pressure, further selling pressure. Uh, One thing to take into account: the dollar is weak, right? So if we are going to see a weakening euro, or so, maybe you may want to trade it against other currencies and not against the greenback, which is also weak. It's not a good idea to trade weak against weak, but weak against strong, like euro pound or euro Aussie, for example, or even euro Japanese yen. Okay. Anyway, for Friday, I do believe that the market attention will be on all the PMIs that we are going to be released in Europe, right? Particularly because it's like the latest or the ultimate barometer of how the situation is going on in Europe. Remember, I told you a few minutes ago that we were talking about a problem, a steady growth in Europe, a limited but steady growth. Well, that's coming from here, okay, from PMI readings. So if we had better than expected or even better than previous month's number in here, that would probably also give the euro a little push higher, right? Uh, of course, we have several readings, France, Italy included, but the main attention of the market will be, of course, in Europe and in Germany. The thing, I do believe that this time Germany will be even more relevant at the European readings because lately reports or fundamental data coming from Germany has been pretty weak, right? And let's not forget this is the first economy, the number one economy within the euro area. So if Germany starts to tumble, the rest will follow. Okay, so keep a bigger eye, a closer eye to whatever happens in Germany, okay, rather than in the euro area, right? Okay, give me a second. I will take off the calendar. Give me a second, and I will share my charts. Give me a second, and we will take a look at what we have to watch technically. Okay, there are several interesting things going on in the market. As for the euro, the fact is that if we take a look at bigger time frames, there is a mild positive trend developing, right? Particularly led by this ascendant trend line. We have a poor attempt to break lower, but the price is now stalling even higher, right? Well above the moving average. So overall, I see the downside limited in here. at least in the long term. And the level to watch over the upcoming days, at least towards the downside, right? The main support for this one is the 1280 level, okay? We have several intraday highs and lows in there. Right, if you take a look at the 4-hour chart, sorry, I know I'm taking it easy. So that's the level to watch. I do believe that approaches to that level ahead of the ECB should probably attract some short-term intraday buying interest. But if we lost this level, there's a good chance to see the pair falling around 100 pips, 1180, 12, not that much lower, okay? Unless we have really, really bad news from the euro area, and that will depend, of course, where the price is before the ECB meeting. And to the upside, the level that should be under scrutiny should be this 1460. I will change back to the daily. Sorry for making it this. If you take a look at these charts, the pair has stalled around the level several times ever since May this year, or before April, sorry, this year. Of course, we have this spike higher, which is the Black Monday trigger for China, but as you can see, it take it not longer than 8 hours to reverse it and come back below it. So that's the level, still the level to break. We had an attempt late last week to break above it, and we met selling interest around there. So really, really is the level to watch, because we need some steady gains above this to confirm a bullish continuation in the euro, right? Anyway, as I said, I believe that both currencies are in weak, so there's not much to play in here. I would like to take a look better at crosses than the euro dollar itself. When it comes to pound, right, we have this decline, right, for September decline, okay? And the price has broken above the 61.8% retracement of that level. Really sorry, guys, I have a cold. Anyway, has broken above this level, right, with the release last Wednesday of employment figures, as I was saying earlier. And here we are, dips below the level are attracting buying interest, 54.20, 54 buyers are lying there. I do believe that in here we will see more of that buying on dips, okay? And if we have some positive data that help us break this highs in the 55 region, we can go up to back to the high side set in September around 56.60, right, and complete a full 100% retracement. But overall, I do believe that the pound is bullish, and even declines up to this level, 53.80, which is the 50% retracement of the same rally, should be taken as buying opportunities. Only a break below this level, because I don't know, all hell broke loose in the United Kingdom. All of a sudden, we believe that Bank of England is no longer going to raise rates. Could put the pair under enough pressure to send it lower, or maybe I don't know, and use the United States, it's back on track to rising rates this year. And on that matter, I would like to say that we had so many mixed signals coming from the Fed and Fed officials ever since, I don't know, mid-July, right? And the huge disappointment that it has been that they left rates unchanged in September, right? So I don't think the Fed, or even Fed officers in their speeches, or not even Jolene, can convince us from anything different than the U.S. will delay its rate hike until 2016. Okay, there's nothing that will convince us except the actual rate hike, if they give us one late October when they have their meeting, or in December. In the meantime, I don't believe that positive US data will be enough to support speculative buying of a greenback, right? Okay, sorry. I know I'm mixing a bit things, but okay, I guess we will get better in track once I get used to do this weekly webinars, okay? Anyway, the dollar Japanese yen, I have said many times before that despite we have been trading within clear range lately. The risk remains towards downside. The pair has been traded ever since late August, mostly between these two Fibonacci levels, the 61.8 and the 38.2 of this latest weekly decline. And during that last week, we had a break lower, which all figure found buying interest around the next Fibonacci support, which is the 23.6. Nevertheless, what I'm looking at in the daily chart is that there's the 200 simple moving average pretty much converging with the top of the range, and the 100 simple moving average that it's turning south and approaching to this one, indicating me that the sellers are so far much more than the buyers, right? So I do believe that the risk it's also remains towards downside. I would like to see a pair breaking below 19, right? Breaking below 19 to confirm a rally towards here. Keep in mind, the Bank of Japan was also having its monthly economic policy meeting by the end of October, and the market is expecting them to offer some kind of extension also of their easing programs. Okay, so we are talking that they will probably enlarge their stimulus, and that should give the pair a boost, right? Weaken the Japanese yen. Kuroda has been saying for long that they are on track to achieve their 2% inflation target, but the fact is they're still far away from it. Anyway, I do believe the market has already priced in a good part of any kind of quantitative easing extension the Bank of Japan can do. Okay, so I don't believe that that will be enough to give the pair a long-lasting boost. Okay, maybe if we had an announcement over Asian hours and due to the low volumes we have in there, the pair will probably jump higher, right? But I do expect selling interest to start at higher levels, probably approaches to the Fibonacci levels that have contain the upside. Okay. Anyway, I don't see much of an upward potential in here yet. I really want to see the pair settling up at least about 21, right? And despite we're 150 pips away, seems too far away at the time being, right? Um, a small comment on sorry on oil, right? As I was saying earlier, there was a small attempt to advance in here, but I'm taking a look at the daily chart, and the 100 simple moving average maintains a really strong bearish slope and continues to head lower and attempt to break above. It has been invalid, right? I believe still that 43, 30, 44 region. That's the level to break. Okay, 43 there. Oops, sorry. There. Okay, as long as we remain above this level, which is the base of the latest range, I don't see much of a downward potential in here. Okay, but sorry, I will shut up my cell phone. Sorry, there it is. Okay, as I was saying, I do believe that there's not much downward potential in here, but also I do believe that the upside is pretty limited because of a continued oversupply market. We have continued worldwide glut of oil and lower demand because of lower growth. So I don't see much of an option in here, and I do believe that we may retest these lows during this week, right? Sorry, and I will end today with my friend Yossi. I do believe this is one of my favorite pairs to trade lately. If you take a look at the daily chart, we have set sort of a double floor in here, but the break above the neckline, right, we had was not actually strong enough to confirm a rally. We have a pullback. We are standing in there. I don't know. The market is waiting for the minutes today, right? So after the minutes, it will depend on how dovish or hawkish the tone is to confirm whether the pair will be able to rally or not. If you take a look at the daily chart, around 73.80, where the pair topped last week, we have a huge resistance level. So my take is that above this level, we may continue rallying higher, okay? Up to 75 with little in the way. So that will offer us a nice trade, okay? And as the pound, I still see that dips are will be taken by the market as buying opportunities as long as we hold above this 200 simple moving average around 60 to 180, 62. Okay, short term intraday, I do believe that the chances are always to the upside, particularly if stocks maintain a positive mood. Okay, anyway, okay. Uh, okay, here we are. Okay, guys, I do believe that that's it for today. Hope you enjoyed it. Hope you learned something new. Hope you get something useful for today. Okay, see you back next Monday, and I hope I have much more to share with you next week. See you soon, and bye bye.